Traders, what is up? It is Dave, Market Scalper D. Quick video on the fly, man. We're going to talk about edge, right? What is edge in the market? You hear it a lot and you're like, what does edge mean? Am I just going to come out break even or better? Part of your discipline as a trader, right, is to always secure the profits to trade another day. It doesn't matter if you have 10 amazing trades, but if you have one bad trade that you end up negative on, right, your emotions are going to take over. So having edge is also having the discipline to set those stop losses, right? To trail your profits. To also set those stop losses where you think they won't get hit and give yourself some room for the trade to breathe is also edge, right? But risk management number one is a part of edge, and just securing those profits so you can live to trade it another day. Because you can wipe out 10 perfect trades in one really bad one where you're averaging in to a loser, and you can completely wipe out, if not months, depending on what kind of size you're dealing with on that trade. And you really don't want to get stuck blowing accounts like I have before. And you know, I put in that work and I put in the time on the charts, and there's been situations where the only way that you can build edge in the market is by simply putting in the time it takes to become a participant, right? Like learning price action, watching patterns unfold that you've seen before, which brings me to the max pain level, right? You can see right here at the top, right? If you zoom in, right? 1, 2, 3. That's King Kong knocking on your doorstep, right? King Kong's like, yo, the market maker's there, right? I'm about to take a dump on your front porch, and there's nothing you can do about it, but there is. You really need to recognize that what makes a good trader is being quick, being able to recognize when the market's going to turn. You could have 20x'd your money on the way down had you held way down here till 2 o'clock. All these areas right here where you see the bounces, those are the market makers tapping stop losses on all those 0 DTE options that are running in the money that we're 20xing, right? It's not a coincidence that 2 o'clock down here the market bounced, because the max pain level was 744 that you can see here right there. You know, on the same day it was around, it bottomed at 740 and ultimately closed at 744. Well, what was the max pain? 744, right? It's not always going to be accurate, but it's good to be aware of it. And then also understanding a little bit about like sticky time decay, right? 2 o'clock, right there, it says theta accelerates sharply, especially around 2 o'clock if the underlying asset moves in your direction, but stalls, right? The time value disappears, and then basically the price moves, causing a net zero on your option, right? So essentially they're going to destroy all these guys right here that are the Johnny come latelys. If they were too greedy to not get out here by 2 o'clock, you can basically see where in this level here, this is when they destroyed all the 0 DTEs all the way up, and then ultimately tagged the max pain price. And that's something just important to know of market mechanics, right? You need to be aware of that level and why 2 o'clock is so important throughout the day. And if you're holding bags after that, well, you just got market exposure and you learned another lesson why not to be greedy, right? So if you're going to go bearish and all these levels, there's nothing wrong with taking profits and having that tight stop loss, because it secures that you're, you know, taking your profits and you know, surviving to trade another day. So it's extremely important just to understand market mechanics. You know, learn a little bit more about options if you're not an options trader, so you can try to figure out at what point is that market maker possibly going to dump on retail, because it's going to hit all those stop losses, and it's going to basically force every stop loss to get hit, essentially making the dump a lot worse. And it's not coincidence by exactly at 2 o'clock. That's how powerful these guys are. They can essentially move price most of the time anywhere they need it to go by expiration, because they don't want to get caught over leveraged, and it's their job to basically buy and sell those contracts to people from around the globe by the thousands per second. Even if they're at a loss, they're going to buy those contracts back, especially in the money. They're basically buying those contracts back. So that's their job, and it's our job as retail traders to have edge by just being aware that the market operates by times, and using little 30-minute increments throughout the day will really help your trading. You guys have a really happy 4th of July weekend, and looking forward to the trading week coming up. You guys take care.